Is the U.S. stock market really unshakable? Imagine a scenario where the robust U.S. stock market faces a potential setback due to a surprisingly high Producer Price Index (PPI) report. You might think that such a significant economic indicator could halt the market's momentum, but the reality is often more complex. As we look ahead to the trading day in Europe and beyond, it's essential to understand the current market dynamics. Despite a notable increase in wholesale prices, S&P 500 futures managed to maintain a slight gain of 0.2% during Asian trading hours. In contrast, Nasdaq futures have experienced a decline for 3 consecutive days, indicating some underlying volatility. Meanwhile, the yield on the U.S. 10-year Treasury bond dipped by 2 basis points, settling at 4.2732%. One of the immediate repercussions of the elevated PPI figures is the market's diminishing expectations for a substantial 50 basis point rate cut from the Federal Reserve. According to the CME Group's FedWatch tool, traders are now pricing in a 92.1% chance of a more modest 25 basis point cut during the Fed's upcoming September meeting, a shift from the previous certainty of a cut. Turning our gaze to Asia, we see mixed signals from the region's largest economies. Japan's economy showed signs of robust activity in the last quarter, likely in preparation for impending tariffs from the Trump administration. Conversely, China's economic indicators revealed concerning trends, with signs of slack emerging in its growth trajectory. In Hong Kong, stocks fell by 1.2% following the release of disappointing economic data from China for July, which included lackluster retail sales and industrial production figures. However, the large-cap CSI 300 index saw a 0.5% increase as traders speculated that these figures might prompt additional stimulus measures from the Chinese government. Notably, markets in India and South Korea were closed for public holidays, which may have influenced trading volumes. The Nikkei 225 index in Japan rebounded by 1.2% after experiencing its most significant one-day drop since April 11th, breaking a 6-day winning streak. This recovery was fueled by unexpectedly strong GDP data, which indicated an annualized growth rate of 1.0% for the April to June quarter, surpassing analysts' expectations. This positive news could provide the Bank of Japan with more data to consider ahead of its next meeting on September 19th. The dollar also weakened by 0.3% against the yen, trading at 147.64. In the commodities market, Brent crude oil prices fell by 0.1%, reaching $66.79 per barrel, hovering near a 2-month low. This decline comes just before a significant meeting in Alaska between U.S. President Trump and Russian President Putin, scheduled for Friday. Mark Vellin, head of investments at Lucerne Asset Management in Singapore, commented on the upcoming meeting, stating, "The first meeting doesn't seem like a major market-moving event. It's more to set up a second meeting, which will likely be more important. If a ceasefire is reached, expect a positive reaction in the euro and a weaker dollar. The opposite if a ceasefire fails. As we prepare for Friday's trading, several key developments could sway market movements. EU data. Eurozone reserve assets for July will be released. UK debt auctions. The reopening of government debt auctions for 1-month, 3-month, and 6-month maturities. What are your thoughts on the current market conditions? Do you believe the stock market can remain resilient in the face of economic challenges, or do you foresee a potential downturn? Share your opinions in the comments below.